What's up, guys? It's your boy Quick Stocks. As always, remember to hit those thumbs to recharge my dopamine, and we will get right into your quick stock analysis of Spartan Energy, ticker symbol SPAQ, trading for $17.50 as of July 12th, 2020, equating to a market cap of over $1 billion. As we can see here, in the last month, the company remained relatively stable until the last 3 trading days, where the company has seen a historic rally of well over 60%. And I assume a lot of you watching this video were lucky enough to get into Spartan Energy early. And if you did,
I just want to tell you,
congratulations! 60% gains in a few days is absolutely bonkers. So what's the move? Are we riding our electric SUV into battle with Spartan? Or are we going to hitch a ride with Papa Elon to Mars? This is your quick stock analysis. Just so that we are on the same page, the reason that we've seen this insane rally is due to speculation that Spartan Energy is going to merge with Fisker Inc., which of course is a player in the electric vehicle market. Breaking news, as of July 13th, 2020, it looks like Fisker will indeed merge with Spartan Energy. Currently, Spartan Energy is a blank check company, or a special purpose acquisition company. They don't have a specific business plan or purpose. Its business plan is simply to merge or acquire a pre-established company, typically within a 24-month period. And yes, a blank check company can appear to be rather sketchy from a retail investor standpoint, as shareholders put money in a holding that has no business plan and really has no say in the future direction of the company. Well, pump the brakes. That's not necessarily the case. Don't get it twisted, it is extremely speculative. However, there is usually protection in place for investors, as the raised funds are typically put into an escrow account until an acquisition is agreed upon, and if no acquisition is made, the money is returned to shareholders, which I should note the chances of this taking place are rather small. So with all of this in mind, we could assume the acquisition is set to take place, which, considering the hype surrounding the EV market, this will certainly represent a catalyst for investors. So let's assume the merger takes place and take a look at Fisker Inc. and see what's under the hood. The CEO, Heinrich Fisker, which I must admit is a powerful name, who we can see climbing out of the trunk of the company's SUV, actually has experience in the car industry, as his first company, Fisker Automotive, went bankrupt thanks to the failure of his hybrid sports car known as Karma. Ironic. The thing is though, I do firmly believe one learns a ton from an experience like that, and I assume it would actually make him a better CEO. And even before becoming a CEO, Heinrich Fisker designed cars such as the Aston Martin, the DB9, and the BMW Z8, as well as had a brief stint at Tesla, which was ended when he requested to add solar panels to the top of the Model S, and Papa Elon told him to GTFO. So as one does, he decided to start his own EV company. And that, friends, is how rumors are started. But for real, Fisker debuted the company's $37,000 electric SUV, which includes a solar roof, and the car is expected to get between 250 and 300 miles per charge, with a 0 to 60 in 2.9 seconds. So what has a lot of investors hyped is the lease the company will be offering, which consists of $370 a month that allows 30,000 miles per year and includes maintenance and service. However, it does require an upfront payment of $2,999. So let's do some quick math. The average American keeps a car lease for 3 years. So $3,000 divided by 36 months rounded down equals $83, plus the monthly payment of $379. Comes out to $462 if you were to keep the car for 3 years, or $16,632, which as an investor, that literally hurts my soul. But as usual, I'm getting off topic. And I guess while I'm at it, we're getting to the point in the video where we should start racking up some dislikes. We all know who's the biggest player in the consumer EV market. Our boy Tesla, and for transparency's sake, even after taking insane gains, we still have a good sized position in Tesla, worth around 70 grand. So yes, here at Quick Stocks we may be slightly biased, but Tesla is absolutely crushing Fisker in every metric. I mean, to start, Fisker won't have the Ocean for sale until 2021 to 2022, and I don't think anyone would be shocked if the first few generations are riddled with bugs. Let's be real, Tesla is still struggling with it. And of course, Fisker won't be making a profit on this vehicle for a long time. The company's going to be running at a net loss, and one should certainly expect shareholders to be on the hook for it. And yes, Fisker is expected to have an autonomous feature, but ask yourself, do you really think it will match up against Tesla's autopilot with the tens of billions of miles Tesla already has under its hood? And remember, we are talking a year or two from now. Tesla is already on the brink of fully autonomous vehicles. Fisker has no brand loyalty, and if I'm being real, hasn't proven itself. Now that half of you are salty, I'm not saying Fisker is a bad company. I'm just saying if you want to play in the EV market, which one could already reasonably argue is in a bubble, why would you want to bet against Tesla? Just to give you an example, even with crypto or pot stocks, it's really anyone's guess to which company or companies will dominate the future industry a decade from now. And don't get me wrong, nothing is concrete in the EV market, and it's certainly still up for grabs. But let's just say I wouldn't want to make a sizable bet against Tesla. And obviously, there's going to be more than one big player in the consumer EV market. But this isn't even taking into consideration that there were only a handful of big players in the internal combustion engine. And those players aren't going to roll over and just disappear. Toyota, General Motors, Ford, etc. These players already have massive brand recognition, experience, partnerships, access to capital, and so on. Which, yes, here at Quick Stocks, we understand already having facilities and a brand that is connected with gas-powered vehicles offers all sorts of roadblocks, including huge losses as the company changes its infrastructure and the difficulty in changing brand appearance. I mean, just look at the new Ford Mustang EV. And of course, this doesn't even take into consideration what the trillion-dollar tech companies have in store for us. And don't get me started on the hundreds, potentially thousands of startups. I guess what I'm trying to say is that it's just hard to imagine Fisker stacking up in a substantial way. However, investors should remember that the car isn't for sale yet, and it's really anyone's guess to how the cards are going to play out. And I don't know if I would really call this an investment play. This seems more like a hype play with sharp swings rather than long-term investments, in our Quick Stocks opinion. As it is important to note, Fisker has made plenty of crazy claims about the car, which you can check out on his blog. To quickly summarize, Fisker stated that the Ocean will be the most sustainable vehicle ever made because of the solar roof, and the car will use fully recycled carpeting that's made from abandoned fish netting waste, which is cool. The interior will be 100% vegan, which primarily means leather-free. Anyways, let's wrap this up. With all of this in mind, what's our move? Well, if I'm being honest, I wouldn't be surprised to see more pops in share price as acquisition news comes out, which certainly could benefit investors who get in now. The thing is, here at Quick Stocks, that's not our investing strategy. And considering the sizable investment we already have in the EV space in companies who have already proven themselves, it seems like an unnecessary gamble for us to make. As always, I wouldn't fault anyone who wanted to make a small spec play to try and ride the hype. I genuinely wish you the best. It's just from an investing standpoint, we gotta recommend that you avoid this company, as there are plenty of great companies you could invest in without this insane level of risk. Anyways guys, that's all we've got for today. As always, the best investment you can make is to go long on Quick Stocks. Hit that subscribe button now at 720 subscribers and plan an early retirement. I will catch you guys in the next one.